Hello, everybody. It's Thursday, coming to you live on Dallas Trading Floor. Well, sorry, I'm a little bit late today. I got I got kind of waylaid on some trades late in the day, and I didn't quite get everything up. But I will. We're going to go forward now. Basically, here's the deal. It's another day of pain out there, and it does look like the Dow now is basically at the fresh 2022 lows. So, the market has continued to move lower, and so not exactly the kind of market that is fun to trade. But we are definitely gone a little bit lower here, and I suspect we're going to probably go even lower than this. So we are not in a confirmed uptrend. We moved to a confirmed uptrend briefly, but then we now are in an uptrend under pressure. So just not a great market all the way around. Kind of a tough market to trade, but hopefully I will give you some good stuff. Well, I was stopped out of two stocks. I was stopped out of Valero. I was out of Valero. Let's see. I was out on my stop loss on Valero at 119. It did come back a little bit, but I was out. The only stock that I have long that was up today was FLNG. That was up a little bit, so that's not bad. But the rest of everything not looking too great. That's definitely for sure. But on the other hand, we did do very well on the shorts, and I want to kind of show you some of those. We've got 5 shorts going on right now. We have a bear put spread on Boeing, also on Salesforce, Disney, then Netflix, and then Ross Stores. Now, we put on the one on Ross Stores last night, and Ross Stores took an absolute dump after hours. This one probably will do fairly well. I'll show you the live chart on this one, raw stores. Hopefully there we go. We'll get raw stores up here. But basically what's going on is that what's going on here is that raw stores after hours went all the way from 92 all the way down to 72. So that's amazing. That is $20 a share that it lost just because it did miss its target. So not looking good for raw stores. Kind of want to show you how that played out. Basically, here is the kind of the layout of what we did yesterday. We bought a June 17th 90 put, and then we simultaneously sold that June 17th 80 put. Our out-of-pocket expense on this one, $290. And this one, because it fell so hard, we picked up about $541 today. So pretty good for each contract that we were down. Now, this has a break even of 87.10, and we will make all the money if we can hold this thing below 80 out until the expiry, which is on June 17th. So kind of a nice little trade there. I'm going to be looking at some other opportunities in the retail space, because unfortunately, because of the situation that's going on with the markets, with the economy, people just aren't spending. And so I suspect we're going to have some weak numbers in Costco possibly next week. Now that reports in 10 days. And we might be able to put up a good spread there. Just want to show you this one as well. The only thing is, of course, when this becomes too obvious, you're not going to be able to get kind of the numbers that we were able to get on raw stores. But this one does look very, very vulnerable. Costco does look very, very vulnerable. I just think we could move down to maybe 410 possibly. It does seem to be getting a little bit of support. But one thing I do know about these retail stocks, especially the higher priced ones, they tend to get support at the even numbers like 400. So in about a week, I expect this will be down. And I think in a month, we'll be trading it at 400 or below on Costco. Now, can we make money on this? Absolutely, if we do the spread right. Part of the reason I like to do these spreads so much is because they tend to they tend to make money. But if we have a bear cat, if we have a bounce on them, you limit your losses, and that's so important in this game right now because it is such a competitive it's such a competitive game right now with some of these stocks moving not moving in the same direction. So one of the reasons I like to use bear put spreads is because it limits the risk, but it allows us to get some of that good juice if the stock is going to fall. And I should be putting together more of these, of course. One of the things I just want to point out, I haven't put anything. I didn't get any time to put out I put out a video on the bear put spread on Raw stores yesterday, and I'm going to try to make several of these other ones if I get fills coming up. So if you want to kind of keep in the loop there, just go register at www.Dallas Trading Floor, and that way we can get you all set up for that. So without further ado, let's take some questions. This dude is a scam. I love that. Okay. Well, okay. I guess so. I guess you don't want to make money with me. That's okay. Follow the host. Okay. Why do you say that? Well, anyways, there's going to be some haters out there, but at least I'm getting some people watching, so that's good. All right. If the SPY goes down, oil stocks go down as well. Well, possibly, but because there are some definite in the oil sector, we definitely have a lot of the, we do have some oil stocks in the S&P 500. That's absolutely for sure. But they typically are the smaller ones. So there's also oil stocks in the Dow. I mean, I own Chevron, and of course that's a Dow stock. But let's look at the XLE, and that's probably the best one. That's the Energy Select. That's the Energy Select. The Energy Select ETF for the energy sector, and let's kind of take a look at it to see kind of where it's at. Here's the chart for that for the XLE, and basically it has been pulling back a little bit, but it's in an upward trend. If you'll notice, after hours basically flat 81.42. The advantage of the XLE, of course, is it takes the oil sector. Now, a lot of this is Chevron, a lot of this is ExxonMobil, but this is, this can be a very good way to play the sector if you don't want to pick individual stocks. So in terms of going long, what I mean by going long, of course, is that if you're going long, you're owning the stock. And if you're going short, you're basically taking a position against the movement of the stock. So I really only at this point recommend going long in very few sectors, oil being one of them. Let's kind of take a look at the sectors and to kind of give you look-see on that, just so that you can take a look. Now, hopefully you can see this. Sometimes it's tough to read this on the screen, but I want to show you the 197 sectors and which sectors are doing the best, and we're just going to sort them by strength. Let's look at that. Of course, number one is coal. Believe it or not, it's coal. Number two, oil and gas drilling. Number three, royalty trust. That's oil and gas. Number four, international E&P. Agricultural chemicals. That's number five. Oil and gas integrated. Oil and gas Canadian. Oil and gas. Oil and gas. Oil and gas. So basically, the strength right now in the market, and this is really the only place I think you want to be long, is in the oil sector. And I still think that even if the S&P goes down, many of the stronger stocks in the S&P that are in the oil sector, they're not going to go down. They're going to buck the trend. The stocks I think that are going to get hurt are in the retail sector. That's where I'm thinking we're going to see most of the damage is in that retail sector. Why? Because in the retail sector, that's where the rubber hits the road. That's where people are taking their discretionary money and spending it. So I see the retail sector as being the weakest of the sectors. That's the sector that I'm concentrating on for shorts because I do think that that's going to be the case. Let's look at BBI. If this is Build-A-Bear Warehouse, this is BBWI, excuse me, BBW. is Build-A-Bear Warehouse, and that one is weak. BBWI. Let's take a look at that one. That's Bath and Body Works. That's also pretty weak. That's retail. I do like the retails for the shorts because I do think that there is a lot of weakness there. Now, this one I believe has come through earnings. Let me take a look here to see. Let's see. Okay, their earnings are coming up on. They've got a little bit of time to go on earnings. It's 8/18. So, this one could be a potentially good short. I'm looking at it. Let's kind of get up to, let's get up to 20,000 feet and see. Okay, so we made our high up here, and then we made our high recently, and it's in a downward trend. So yeah, there's definitely, this could be a lot more damage. We could see this come down a lot more. It's got a 22 relative strength with a downward trend. This is the monthly chart, so this gives us a kind of a view from 20,000 feet. Let's take a look at the weekly chart. Boy, look at that. We had a kind of almost a gap down there on the weekly chart. Of course, there's no gap down on weekly charts because it's it's a day-to-day thing, but definitely below 40. I see some support. The nearest support I see is right about is coming over from here. So I see some support, and I see some support there too. Let's see if we can get a temporary line here. Let's see if I can track the price properly for everyone. Well, there we go. So that is support is 29, and we're currently at 40. So this could easily fall, in a month, this could easily fall 10 points. This could easily fall 10 points. But the price to short it probably would be at about 35. That would be my guess, about 5 points. I definitely think it will rally and it will come back up. So I don't know if I want to short this one because it's not set up properly. I want to see it rally up to that 21-day line before I would short it. But definitely don't want to go long on this one. This one's going lower. Probably going to be a $35 stock by the end of the month. That would be my guess on it anyways. All right, let's look at, for Dan, let's look at SQM and take a look at that one real quickly. SQM and that, SQM, bringing it up on my machine here. There you go. Oh yeah, this is a great stock. This is a Chilean, this is the Chilean fertilizer company. This is set up very, very well. It's in a buy zone. By the way, this is one of the ones that we possibly could take a look at buying. Why? Because first of all, it's in a buy zone. The pivot on this one, 90.87. It's currently at 95.70. So it's almost right. If you wanted to buy it, this would sort of be the last chance to get aboard because it's moved up so quickly that it's almost extended, but it's still okay. It's closed at 95.23 and now it's at 95.70. So it's definitely coming. If you want to buy this one, buy it now. Don't wait because it does look like it's going to go higher. The biggest issue that you have when you're buying this far above the pivot is that it can drop back to 90. The support is going to be right at 90.87. That's the pivot right here. So if you do want to buy this one, this would qualify for going long on. Notice it's in the agricultural chemicals area. This, of course, we just looked at the strength list. This is definitely in it. This is the number 5 strength. This is you really only want to buy in the top 20 sectors of the market right now. Definitely this one's in the top 20. It's in the top 5. It's got a 100% checklist, excellent checklist. So if you want to go long on this one, I don't, I was in Mosaic. I think I'm still in Mosaic. This one would be a good one possibly to go long. It's a quality company. Let me look at Mosaic, MOS. That's also in the same area. That's the and we're in this one. I'm in this one. I don't know if I was stopped. I wasn't stopped on this one. I was darn close to getting stopped, but it looks like it's making a reversal higher. This is also in the same group, the chemical agriculturals, which this is a good group. This is a good group, but I think that looking at the charts, that SQM is set up better than Mosaic right now. Let's look at NE as well and see kind of what's going on there. Noble, okay, this is also in a good area. Number 2, this is the drilling area. Remember, we are in sort of in a downward trend, so you really don't want to buy that many things long. But if you're going to buy long, you want to be in the sectors that are working. The sectors that are working right now, of course, oil and gas and agricultural are working. So this is definitely in a working sector. Nobel, not quite as good a setup. We're a little bit shy of the buy point here. If we draw a reversal line, let's see if we can put in a reversal line here and get that in. Get that reversal. Oh, it's not letting me. Come on, baby. There we go. Okay, if we put a reversal line in there, we're still, this would have been the correct reversal. This would have been the correct place to buy it right there. We're definitely above the reversal line and we're coming up to the pivot. You could still probably buy this one. It's got an excellent checklist, 89, and it is below the pivot. The pivot being, it's got basically 11% to the pivot. So we're pretty well below the pivot. The pivot on this one, 36.79, we're at 32.65. So we're below the pivot. So yes, we could probably definitely pick this up as well. So both of these look good. Both of these look good. The SQM is almost extended. So if you want to buy one of these, try to buy SQM at no higher than currently where it's at. You've got a little bit more room with NE. So both really good. Thanks for bringing those to everybody's attention. That's excellent. All right. Do I need to get out of LMT? This is, I think, Lockheed Martin. It always, the answer, unfortunately, is it depends. It depends. Yeah, I would say that probably it's a good time to be out of this one. I do think we're going to get some support down here there is some support down here, but we're in a short-term downward trend. So I would be, yeah, I think based on the way this market is trading, it's probably not a bad idea to be out of this one, depending on where you're at. If you're down more than 7%, really consider it, because in this kind of market, remember, we're not in a very good market. We're in a market that is, that is retreating. So here's the thing. What I would do is I would set a stop loss and then just set and forget. That's what I do. If I look at it too much, then I say, oh, I'll wait for it to come back. And a lot of times I'm very I'm very disappointed when I do that. So here's the most important thing: never let the stock move against you more than about 7% from your buy price. So depending on how far you're down, what I would do is I would take your buy price, multiply it times 0.93, and that'll give you the 7% stop loss number. Put that in and just put that in. If it triggers, it triggers. If it doesn't, it doesn't. That's a good way to kind of manage your position so that you don't get stuck with with the capital destruction. You just don't want to destroy your capital. That's the major thing that we have to be super careful about. All right, check out PBR. This is a question coming from TikTok. 91 cents a quarterly dividend. Okay, it's in fertilizer. Okay, PBR. Yeah, some of those stocks right now. What's being rewarded in the market, of course, is okay. This is Petrobras. Yeah, this is a good company. I agree with you. Let's see what's Moto 35. I definitely agree with you on this one. This is a good stock. This is definitely one that you can consider. This is the Brazilian National Oil Company, and I have traded this one before. It's got an excellent. Right now, it's set up very nicely. It's not technically at a buy point, but you can kind of see where you can kind of see this 1524 level, and it's right below that. There's some resistance there, but I think it can move beyond that very nicely. It's got an upward trending. Relative strength line, so I like that. It's also in the right category. It's in the integrated oil and gas, which is number 6 out of 197. This is the right place in the market to be buying. 89 checklist, which is very, very good. Let's check the fundamentals on it. I'm going to go over here to the weekly chart and take a look at that. We've got some pretty good fundamentals on this as well. So let's see if we can kind of take a look at that. We just came through earnings, and they had, and I'm just looking at these earnings. Boy, the earnings were good. The sales were up 95%. The profits were up almost 1,000%. Wow, that's incredible. So yeah, the first quarter was very, very, very healthy for this company. Of course, it's the Brazilian National Oil Company. Very, very good. The PE ratio on this one is a 3. So wow, this really is good. This one definitely, everyone out there should be taking a look at this one possibly. This one does look like it could be a winner as well. So PBR like Pabst Blue Ribbon, but this is a Petrobras PBR, and I think this is I think this is a good one. So I think you could definitely I think you could definitely you could definitely buy this one here. Now, I'm not really a fan of buying in this market, to be honest with you, but if you're going to be buying, this is the kind of thing you want to buy, is the oils, and this is definitely a good one. So let's go with some more questions here. Charles is S. I can't remember what S is. Okay, Sentinel 1. No, I don't think you want to buy this. This is definitely, you want to avoid this one, I'm afraid. This just probably is not going to give you a good look here. Just looking at this chart really quickly, avoid it. So I would be avoiding. I would avoid this one. I would definitely avoid Sentinel 1. I don't think this is I don't think this is the kind of chart that you want to buy. Weak chart and not really good. Okay, it looks like somebody is asking about. Dave is asking about Palo Alto Networks. Again, this is not in the right part of the market to be buying in right now. It's it was a area, but PANW. It's just the problem right now is that this part of the market, the computer software security area, it's just not working. I mean, that's just the long and the short of it. This area of the market just is not working very well. And this was a high flyer, but if you'll notice, it's 132 out of 197. So we're buying in the bottom part of the market. We're buying in the bottom 20% of the market. This is not where we want to be. It's trading below that 200-day line, as you can see, and it's in a downward trend. So this one does not look good, even after earnings, which were pretty decent. Let's take a look at the earnings. Their sales were up 80%, and their earnings were up 12%, and it still went down. Why? Well, the reason I think it went down is it's just not in the right part of the market. You'll notice the PE ratio is 65. Remember, we looked at PBR. There was a suggestion. Thank you very much for that. The price to earnings ratio on that was a 3. So this one just doesn't hold up. It doesn't hold up. So I would avoid this one. It's just one of those things. I would avoid Palo Alto Networks. Just not the kind of stock you want to be in. It's not holding. It was doing well, but now it's starting to collapse. So I could see some more damage for this one. I would avoid it. There's just, in this market, you just don't want to be long. You only want to be long in certain areas. Of course, that's oil, fertilizer, and pretty much nothing else. That's kind of, that's where you want to be long. You really don't want to be long in the tech right now because it's getting decimated. I mean, that's just the long and the short of it. Hi, Jim. Would you dump Tilray down 50%? Absolutely, I would. And put it towards Amazon before the splits? No, I would dump Tilray and I would buy oils. I wouldn't buy either of them. I would dump Tilray, and I would look for a good oil stock, probably the XLE. I think Amazon, even when it splits, is not going to do that well because retail is getting hammered. So that's kind of my viewpoint on it. I think that should consider dumping Tilray because, I was trading the marijuana stocks way back in 2017, but I haven't traded them since. There's a lot of problems with them, and I just think that you're not going to, I think it's better to go to cash right now. I think that's going to be your better bet. So I appreciate the question, though, but no, I would not do that. I would be selling Tilray, and I would be in cash waiting for a better opportunity. Let's look at John Deere. This area is relatively good. The farming area has been good. I mean, the farm prices have been off the chain, so people are buying new equipment. So this technically is one of the better areas of the market. But I do not like the action on this chart. If you'll notice, it's a downward trend on this chart. We've just broken below that 200-day line, and with earnings coming up in one day, you know what? I would probably be a short on this one, actually. My guess is that we're going to see some weakness here. I wouldn't short it because I'm more interested in shorting the retail stocks because I think those are the weakest. But this one, I would not be a buyer of this one. I just wouldn't be a buyer of this one. I think it's too dangerous. All right, so you're up. That's great. LMT, you're on Lockheed Martin at 10%. Okay, here's what I would do with LMT. It may go up even higher, but what I would do is I would take off 50%. I would take profits here. If you're up that much, that's fantastic. So you probably were a buyer. Let's see, you were a buyer back on this breakout you're on the breakout. So you bought it probably back here, probably back around the end of January, and you're a buyer there. So here's what I would do. It's in a downward trend right now. I would take half of my position off, and I would start taking profits on this one because it may hold up, but it may not. You never know. Do you set stop losses on options? Very good question. No. Here's what I do. Here's what I do when options and spreads. I set alerts. And then when I see an alert, then I take a look at it to see if I'm going to close or not. But that's a great question. You can set stops on options, but the reason I don't set stops on options or spreads is because they're volatile. They're too volatile for that. So sometimes you'll get in a momentary situation where they're trading out of sync, and then you'll get stopped out, and then you'll realize that, hey, it came back to what they call a natural, and you get stopped out. You could have made money, and you get stopped out because it was out of sync. So no, I don't put stop losses on options or spreads. But I do always put the break even, typically the break even price, and that is an alert. Thank you for that question. That's a great question. All right. I told you Under Armour was going to tank today. You certainly did, and I didn't. I just went out there and I didn't short it. I shorted Ross Stores, but I didn't short on Under Armour. I'm sure that it did tank as well. There's just been a lot of damage in the retail sector. Yeah, it did. It moved. It moved down from. It closed at 18.18, and then it's up a little bit after ours to 8.24. It did tank, definitely. Went down about $2. My only issue with this one, and it's not really an issue, it's just the question of how much meat was on the bone. When I did Ross, there was a little bit more meat on that. With Ross, it was up here at 92. That's where it closed, and then it dropped $20 a share. So that was a little bit more meat. That's why I went for this one, because there's just a little more meat on this one than on Under Armour. But definitely Under Armour did tank, and yeah, that's definitely true. So that is kind of where I'm on the bear hunt right now. The bear hunt for me is in the retail sector, especially the ones that are reporting, because with this inflation, people just aren't going to go. I mean, people think that, well, people are going to go to raw stores because it's cheaper. Well, actually, that's not true. They're not going to go to raw stores at all. They're going to go to the thrift store, is what's going to happen, unfortunately. So, not a good thing. So, if Goodwill was a company, I would probably be long Goodwill at this point. XLE, thank you for watching. I appreciate that. DLO, let's look at DLO and see what we've got there. And DLO, D-Local Limited. I don't know this one. Uruguay, cloud-based payment. Yeah, I mean, I'm not familiar with this company, but it's definitely in a good area. But I wouldn't buy it now, primarily because I'm just not interested in being in anything that's in finance right now with this market. But if you'll notice, this is a downward trend. I don't want to buy. This is the first thing you do when you look at a chart. This is the first thing that I do, by the way, is I go over to the weekly chart. And then what I do is I look to see what is the general direction of the chart. Well, right now, if you look at this one, the trend is down. So just by doing that, I eliminate it. I would not even look further, even though they do have good numbers here, because the trend of this thing is down. I just don't want to buy stocks that are trending down. I want to be buying stocks that are trending up. And that's my first cut. That's the first thing that I do when I look at a stock. I go and I look to that weekly. I then put it on there, and then I look to see what's the general direction of the movement of this chart. Well, this is down, so I wouldn't even consider it. But I appreciate that for bringing that up. All right, let's see. Under Armour had awful earnings. Yeah, cut expectations. Yeah. Well, they're gonna have to get a new chief officer. But the thing about it, in terms of making money on it, it's right now it's just too low really to short, because even if you have a 20% drop like you did from 10 to 8, that's only $2. So that's one of the things you want when you're shorting, you want to have meat on the bone. You definitely want to have meat on the bone. All right, thanks, Footy. MUSA, okay. MUSA is Murphy USA. This is a good stock. Everybody, this is a good stock. It's in the good area. Now, let me just kind of talk a little bit about this. Remember that stock that we showed a second ago and how it was a downward trend? Well, this is just the exact opposite. Murphy is an upward trend. I know this is very obvious, but this is the first thing. This is absolutely the first thing that I check. This is an upward trend. These are the kind of stocks you want to be buying. Why? Because they're moving up against a downward trending market. That's a good stock. And it's in a good area. So it's in the retail super mini marts, which is in the top 20. I always like to be in that top 20 in terms of the sector. So that checks out too. It looks like it had good earnings. Look at that. Very nice. Up 48%. But look at this profit, up 202% quarter over quarter. That is strong. Also, nice low PE ratio of 12. Right now in the market, that's what's being rewarded. Cash flow is strong, $24.54 on a $200 stock. That is a strong cash flow. Return on equity, 50%. Wow, that is something else. So yeah, I definitely like this one, no question about it. Let's kind of give it the smell test. Wow, look at that, 100% on the checklist. So I'm very much liking that. Let's check out some of the other. Let's check out some of the other factors. Let's check out on the pattern rec to see if we can buy it. If there's a place we can buy it. Unfortunately, and this is unfortunate. This has happened so much with these really good stocks like Murphy USA. We are very far above the pivot. We're 22% above that pivot. Now, buying it as it moves above the pivot, that's the best place to buy it. But there are secondary buy points where you can buy off of reversals. Let's see if we can do that here. It doesn't look like it, but let's take a look to see this is when we go to the daily chart to see where to buy it. Well, actually, that's not a bad reversal. We came up right to that 21-day line. So yes, this is actually a good place to enter it. Wow, that's incredible. This is not on. Let's look at the technicals here. Yeah, we're right at the 21-day line. This is where it's going to reverse. and recurs higher. So the ideal buy point, obviously, the first one, of course, is this, what they call this base, and that's our primary buy point. But we are on a secondary buy point where it pulls back to this green line. That's the 21-day line. I think you can buy this one. This is actually buyable right now. So interesting, interesting. So yeah, MUSA is buyable. So I appreciate you bringing that up. That is a good stock. So it's buyable right now, and very, very interesting. All right, let's look at Target TGT. This is for SAIF 5556. I think that's your handle on TikTok. So this is coming from TikTok. And let's look at Target TGT. This is where I've been concentrating my shorting activity right now, has been in the retail area, because it is so weak. The retail area is so weak. And look at this. Target is not a fly-by-night company. This is one of the biggest retailers in the country. It's a very strong company. And look at what happened to it. It was destroyed. It went all the way. It was all the way up here right before earnings. It was right at about 215, and then it just collapsed all the way down here, and it's below 160. So there's going to be a lot of pain for this stock. I would not. First of all, I wouldn't buy it long. I don't know if I would even short it here, because I think a lot of the shorting has come out. But I would watch this one, and if it can trend up to the 21-day line, that's where I would short it again. But right now, the 21-day line has nowhere near caught up with it. As you can see, we're very, very far away from that. What's going to happen, of course, is this line is going to come down, and then it's going to rally up here, and then that's going to be a potential short. But I wouldn't do anything with it right now. It's telling me, basically, Target is telling me that it's time to just watch this. Just watch it. Don't do anything. Don't do anything on it. Let's look at COP. That's ConocoPhillips. And I think that was, for many of that, was the largest company based in Houston, if I'm not mistaken. This also excellent company. This is one of the large integrated companies, one of the large integrated oil companies, such as Chevron, ExxonMobil. This is sort of in that class. Shell would be in that class too. You could possibly include Hess, and you could possibly include there's some other ones you can include. Very strong relative strength line. That's good. Again, it's in the right area, 4 out of 197. So this is a very good area to be buying in, is in that oil and gas area. You can see it's where all the strength is. Again, if you're just looking at the chart, the first thing you do when you look at this chart, you go over to the weekly chart, you look to see what is the general direction of it. Well, it's up. This is a general direction up. So this is definitely kind of something that you want to be looking at. Now, to get the right place to buy it, we go over here and we check to see where the pivot is. The pivot on ConocoPhillips, 77.98. So we're above the pivot. So the primary buy point, we don't have access to that. So the secondary buy point is going to be basically a pullback to the 21-day line. That's this green line here. Now we're currently extended from this line, but only 3.919%. We want to try to buy it on the secondary buy point within 5% of the 21-day line in an upward trend, and that's what it looks like. So this is buyable. This is definitely buyable here. You could buy this. These are the kind of stocks you want to be looking for. Definitely a good suggestion. Thank you. Thank you for I appreciate that. That's a good stock, and you definitely can buy it at that level. All right, let's look at LSPD. LSPD. And that is Lightspeed Commerce. No. Again, let's take a look. Let's take a look at that. Let's look at that chart and see why I wouldn't be a buyer of it. First of all, we go to that weekly chart. We look at the chart and we look, oh my goodness, look at that. It's straight down. So this is you can eliminate this just on the first pass. This is a downward trending chart. You don't catch a falling knife, downward trending chart. So here's the thing on here's the thing on this one. Don't catch a falling knife. That's what this means. That when everybody says that, don't catch a falling knife, what this means is that the stock is moving down and lower. The trend is down. And so because of this trend being down like this, you just eliminate it. You don't even look at it. Yes, somebody wants to buy it at the lower low, but don't try to buy something off the bottom. Buying it off the bottom is very hard. You want to wait until it's reversed. It's trending up solidly. That's where you want to buy it if it's in the right sector of the market. Right now, this is not the right sector of the market. This is in the computer software enterprise, and this is 187 out of 197. So this is in the bottom. This is in the bottom 5% of the market. So this is the worst. This is the worst sector to buy in. Well, there's several others that are worse than this, but this is in the worst part of the market to buy in. You don't want to buy in this part of the market because it's in a downward trend and it's in the lowest part of the market. So not something you want to look at. All right, VTNR. Let's take a look at VTNR. And VTNR, let's pull it up, is Vertex Energy. This is in the energy sector. This is where you want to be buying if you're going to buy anything. Oil and gas refining, I definitely like that. Let's go to let's go to the weekly chart. This is the weekly numbers. We definitely we bottomed. We're now starting an upward trend. You always want to buy in that upward trend. We've got a relative strength of 99. That's excellent. This line is the relative strength line, and it looks as if it is outperforming the relative strength line at the very top. So this is definitely looking very, very good. $14.98 on the weekly. So let's go to the daily chart to see if we have an entry point on this one. Not a good entry point, unfortunately. There's really no base pattern here. Unfortunately, looking at this is not a base pattern. It's consolidating up here. You possibly could buy this, but it's just not. It's near its higher high. So if it can move above about 16, you might be able to pick it up. But I just don't know about this. This doesn't look. It's got a decent checklist. I'd be leery about buying this one. I think you want to watch this one and not buy it. Vertex Energy, but this could be very good. Oil and gas stocks can be very, very good. If it moves above 16, that's where I think you might want to take a look at it. And thank you very much, George, for saying smash that like button. I really need that. I need to get out there to more people, and I really appreciate it. That really helps me. Believe it or not, I was really skeptical initially about it. I thought, but please smash that like button. I really appreciate that. That's great to do, and I so appreciate you bringing that up. All right, we're almost there. Let's take a look. All right, thank you, Buck. All right, thanks, man. All right, how low can Tesla go? That's a great question. I wish I knew that. I tell you, man, I made a lot of money on Tesla in the last 2 years, but I haven't been in it for quite a while now. There just wasn't an entry. I've heard that some stockholders, they want them to they want them to do a stock buyback, but that's not going to happen with Tesla because they need the cash for their plants. So I definitely think we could see it move lower. The real pivot, and what I'm going to do here is I'm going to go back to the monthly chart and kind of give, this is the history of Tesla. I was buying it when it came out of this, when in 2020. I didn't get this first one, but I got it kind of right as it came out. I didn't get this initial one, but I got it right as it came out. I have some old videos. If you look back on TikTok, you can see this as it came out of this consolidation. That's really always why you want to buy at a higher high. And then boom, it just moved up terrifically. But here's what's happening right now and why Tesla, unfortunately, is not a buy. This is the monthly chart that we're looking at. If you'll notice, this is the relative strength line. It's a 62 and pointing downwards. That is not a good sign. Since basically basically Tesla since, unfortunately, the last part about November of 2021 has been in a downward trend. So currently, Tesla is in a downward trend. We just don't want to buy it right now. We don't want to buy it. We want to wait for it to form a base pattern. And unfortunately, that does not look like it. As you can see, all the marks that I have on it, it's still in a downward trend, and it's been in a downward trend really since since March. And I think it was a partial downward trend. So not looking fantastic on Tesla. I think we're probably going to have to wait for it to go sub 500 in order to buy it. I think that there might be a potential to buy Tesla at, I'm guessing, there's a consolidation at about this level here. This is the last major consolidation. I think that, if it goes to 505, then I think we might have a potential to buy it. But we just got to watch this thing go lower. It's going to go lower for a while. That's just the way it's going. The way it's going right now. The trend for Tesla is downwards. We go over to the monthly chart, and we can definitely see that. And it basically started back in November. It basically started back here in November of 2021. So that's the trend, and the trend currently is downward. And it is not below that, it's not gotten support. It may go as low as that 200-day line. I think that, possibly we get support at 600, but I think it's more likely we're going to get support there at about 500. So I definitely think we're probably going to get some support at about 500, hopefully. But right now, the trend in Tesla is downward. So remember, the trend is your friend. You don't want to buy counter to the trend because it can really hurt you. So anyways, well, thank you everybody for taking a look today. I'm on at 5 o'clock every trading day. So I'll be on tomorrow at 5. And I hope everyone's doing well. In this kind of market, it's not a bad idea to be in cash. It's not a bad idea to be in cash. Don't worry if you're not invested in the market. Don't worry if you're not invested in the market. Don't catch that falling knife. Don't catch that falling knife. If you want to go long, you got to go to the sectors that are actually working. Right now, the sectors that are working are oil and gas and fertilizer, if you can believe it. Those are the sectors that are working the best now. So stay out of the market unless you're in a trending stock in the sectors that are working, and I would recommend the oil and gas sector. Retail in particular is very weak. Also, computer software, weak. Chips, weak. These all have downward trends right now. We want to stay out of them if we possibly can. Why? Because we just increase our odds by being in the right sector of the market. If we're in the oil and gas sector, which is moving higher and benefits from inflation, we will do better. Retail does not benefit from inflation. It's going down. So thank you, everybody. If you're not already on the action trade alerts, super duper easy. Just go to www.Dallas Trading Floor, and we'll be back tomorrow at 5. Hopefully, I was late today. Thanks for waiting for me. But remember, cash is king right now. If you're going to go long, take a look at the oil stocks that are well set up. Stay out of retail. Stay out of tech. And if you're going to short, those are good areas. But don't go long for them right now until the market conditions change. Thanks, everybody. Thanks, everybody. And I hope to see you back here tomorrow. Happy trading, and don't catch that falling knife. It's great to be in cash. It's not, that's not a bad position right now. So I will see you tomorrow.